Good morning, ladies and gentlemen. My name is Edward Faber, Country Economist for Papua New Guinea. Thanks to Business Advantage for giving us the opportunity to present today. I'll be giving an economic update, and we'll do a quick general overview of the economy. We'll look at the growth, we'll look at the external sector, and we'll look at the fiscal sector, and we'll look particularly in the data, what happened in 2020, and what we expect the trends to be. So just a quick recap on the economy. The economy is 23.7 billion as of 2020. It's driven by the mineral and petroleum extractive sector, which basically accounts for about 1/4 of GDP, with the predominant products being LNG and gold, and we also have copper, oil and condensate. Then we have what's called the non-mineral part of the economy, which is about 3/4 of GDP, which is predominantly services. And we also have the agriculture, fishery and forestry component of GDP, which is about 18%. Within that, we have our plantation economy, which is palm oil, coffee, cocoa and copra. And we also have our semi-subsistence farming, which is where, of course, around 80% of the population reside. So looking at the growth and inflation, first of all, if we look at the last 10 years, we can see how in the first part of the decade, there was very strong growth that was, of course, linked to the LNG investment, which the construction phase ended in about 2013. But that supported growth throughout the economy, showing how these projects are very important for wider economic growth. In the middle part of the decade, we then had the production of the LNG coming on stream. And then towards the latter part of the decade, we've had a kind of a slower growth environment, absence of any major resource projects. And we've also have a number of impediments that we'll reflect on later. There's also been a number of shocks. In 2015, we had a commodity price downturn and we had some droughts. We had a drought and frost leading into 2016. In 2018, we had the earthquake shock, but at the same time, the nominal economy in 2018 was supported by APEC. In 2019, we had a rebound of the mineral sector, but the economy was still performing pretty sluggishly in the non-mineral economy, which of course then leads us to 2020 in the year of the COVID pandemic, where we had been expecting growth of about 2% pre-COVID, which still indicates a relative subdued growth. But after the shock, ADB's growth forecast is about negative 3.3%, and other growth forecasts up to almost 4% in 2020. So if we look more closely at what happened in 2020, we can see how sectors such as accommodation and food services, transport and storage, trade, construction were all significantly hit, particularly by the lockdown measures, disruptions to international trade, restrictions on the movement of people and goods, all having an impact. On the other hand, we can see how there are certain sectors where there was still a level of positive growth, partly supported by government expenditure. And in the mineral sector down here, mining, we can see there was a contraction of over 20%. A big part of that was due to the Porgera gold mine, which production was suspended in around April with the mining license expiring. And we also had Oktedi closed for about 6 weeks due to an outbreak of COVID. And Lahir production was also weaker in 2020. Of course, also lower commodity prices had some impact. Now, if we look at some other data, we can see here with employment, this is based on PNG Central Bank employment survey data. It gives some indication of economic trends. Here on the left-hand chart, we can see the mineral part of the economy, how in 2020 we had a steep drop-off in employment, primarily driven by the Porgera closure. Prior to that, in the previous 4 or 5 years, there'd actually been a growing employment in the mineral sector. On the other hand, we can see how the non-mineral sector has been slowly coming down. as that part of the economy has struggled. But interestingly, as we look at 2020, we can see that there wasn't actually more of a drop-off there. In fact, we actually see some increase based on this index. If we look at some of the sectors in closer detail, one sector to draw attention to is this manufacturing sector, which has actually showed a slight increase over the last 2 years. Perhaps this is due to, especially in 2020, we saw a contraction of imports, which therefore would have supported perhaps local manufacturers to produce more with a kind of import substitution. If we look at the agriculture and forestry fishery sector, that's kind of been relatively flat over the last few years. We didn't see a big drop off there in 2020. Financial services down here has shown some decline, but we see this large decline here in construction, the yellow line. Another metric we can look at is credit to the private sector. This is adjusted for inflation. So after adjusting for inflation, we can see that it's been pretty stagnant over the last number of years. And 2020, it was more or less the same as 2019. So indicating that the business take-up of credit and business expansion has therefore been quite muted. The central bank did respond during the pandemic by lowering its keener facility rate from 5% to 3%, but this probably had limited impact on spurring credit. That rate, the transmission of it to the banking sector is not that strong because there's sufficient liquidity in the banking sector, and also because of the risk profile of the lending market. If we look at inflation, we can see how that was slowly trending down up until mid-2020, reflecting slower economic activity, but how with COVID, we then had a significant spike. This was primarily due to supply side constraints. And the data for June already shows a new spike in 2021, driven by rising prices of energy and global food prices. So our forecast here is for inflation to remain in this kind of 4 to 5% range. Now, looking at the growth outlook, 2021, we've obviously see the continuation of the COVID pandemic. While there aren't many cases in PNG, there's been implementation of a strict quarantine measures on people coming into the country. Also, in the mineral sector, we were expecting Porgera to have some impact in 2021, but that looks increasingly unlikely, although the mine is supposed to perhaps open before the end of the year. So based on our updated growth forecast, which we will release in September, and this is provisional, we now expect there to be some contraction in the mineral sector in 2021, and for growth in the non-mining sector to be fairly subdued. If Porgera comes back online in 2022, that will therefore contribute to this faster growth rate in 2022, and there would be even more potential for upside depending on the output of that mine. The longer term outlook, though, is still very positive. In the short term, we have Porgera to reopen, and then we have the announcement of Papua LNG, which is expected to move towards front-end engineering design phase in April 2022, and then with a final investment decision taken by 2023. There are also a lot of other talks happening around the LNG sector with Pyongyang, and we have the Wafi-Golpu, which is a 5 billion potential project, which has been on the horizon for some time. So there's significant upside in the mineral part of the economy, probably not in the next year or so, but after that, we expect it to come on stream. The challenge, though, of course, will be how to support the non-mineral economy. The mineral investments will, of course, support the non-mineral economy, but the other key is to also look at the many impediments that have been holding back the non-mineral growth. Here we can see the survey from Business Advantage, where COVID restrictions, foreign exchange shortages, challenges with infrastructure, and so on have all been a key impediment to doing business in PNG. Although I think it's also very important to highlight the key strengths of PNG compared to many peers. We have a successful democratic environment where there's been peaceful transitions in power. We have a strong legal system, use of the English language. We have proximity with Australasia and Asia, and the many ties and investment there with Australia. We have huge, abundant, fertile land and resources, and we also have significant experience in the petroleum and mineral sector. So now, focusing towards the external sector, taking a look at imports, we can see how imports contracted in 2020 by around 30%, driven by, of course, trade disruptions, but also this reflects weaker business confidence to invest, perhaps. We can see here manufactured goods is one area that has seen quite a decrease. And if we look at the export figures, this relates to quantity of exports. Metals, we can see a decline. Of course, that relates to Porgera. Then we have the agricultural sector, where in 2020 we saw some decline. Still there was a reasonable level of production. But interestingly, in 2020, we did see continued increase in expansion of LNG and condensate and crude production. So the current account, which was balance, which was expected to fall slightly in 2020, actually finished the year at around 23.4%. So there's still a significant current account surplus. On the one hand, we've seen that there was a level of exports that were maintained, and we've also seen that imports contracted quite significantly. And as we look ahead to the forecast period, we expect this large current account balance to remain. Now, given the predominant foreign ownership of the mineral and petroleum sector, a lot of the foreign exchange generated from the exports tends to stay offshore, or indeed is used to service debt on these large projects. That's why we see this current account surplus really neutralized on the capital account. That's why we don't see significantly stronger foreign exchange flows coming into PNG. In terms of the foreign exchange, then, we still have a backlog of foreign currency orders in Papua New Guinea. This is probably around $900 million or to $1 billion. On the one hand, we have the trade orders, which is for your import orders and the like, which is 300 to 400 million. But we understand that mostly the waiting time is not really more than 3 months, although we don't have specific data on that. This, despite this backlog, we have actually seen an increase in the foreign exchange reserves from around 1.6 billion in 2016 all the way up now to around 2.5 billion in 2020. This has been supported predominantly by the foreign borrowings that PNG has been making use of, and it should be further supported in 2021. The IMF special drawing rights allocation of around $360 million, which is essentially to support the international reserve position. So it would appear that there is increasing scope to use some of those foreign exchange reserves to help address the backlog. The other mechanism is, of course, to address the backlog is through the exchange rate adjustment. We've seen some slow exchange rate depreciation, but it hasn't been very fast over the last few years. And in 2021, it's actually exchange rate adjustment has stalled. So it indicates that there's a continued challenge with the exchange rate mechanism in PNG. So turning to the fiscal sector, well, first of all, we'll look at revenue. In 2020, revenue declined by about 11 or 12%. So actually not too bad considering the COVID context. Here we have the resource revenues in the blue part of the chart. Here we can see how 2020, the resource revenues also decreased, as you would have thought, with reduced commodity prices and also due to the closure of Porgera. We can see that this take of resource revenues compared to the total revenues is on the low side, and that's something that PNG has increasingly been focused on. How can they increase the share of resource revenues? We do expect these resource revenues to start increasing. We have Porgera coming back online, and higher commodity prices will also support increased revenues. PNG LNG in particular should provide increased revenues as the oil price increases. And from 2025, project debt on that project is mostly supposed to have been repaid, allowing for increased revenues to flow. Another thing to mention here is that PNG has been working on a reform program, a revenue reform program for some years, and this has been supported as well by the International Monetary Fund. Some of those reforms, for example, passing of a revised Income Tax Act, implementing Tax Administration Act, these are set to simplify and modernize tax laws and increase the tax take. So there is optimism that tax collection may increase. But as we look at 2021, considering the continued impacts of COVID on the economy in 2021, the budget projections here for the non-resource revenue perhaps look a little bit optimistic, meaning that revenues may come in below expectations, budget expectations. On the other hand, we may see these resource revenues higher than expected in 2021. As we look at expenditure, we can see how in 2020, the expenditure increased by about 9% compared to 2019. Now, given the pandemic, the general approach of governments throughout the world was to provide a level of increased expenditure and support to the economy. So what we see here is consistent. This government has been particularly focused on trying to increase the capital expenditure, which has grown from 4.6 billion kina in 2018 up to 6.9 billion kina. While that does provide a level of support to the economy, it also comes with the risk of course, increased debt and wider fiscal deficits. Another part of the strategy has been to focus on controlling recurrent expenditure, in particular the public sector wage bill. In 2020, the public sector wage bill came out at about 6 billion kina compared to 5.4 billion kina in 2019. So there was still an increase of about 12%. The wage bill remains an ongoing challenge. As we look at 2021 then, we can see that there may need to be some adjustments to the expenditure part of the budget because the wage bill may come in a little bit higher than expected. And since we know that revenues will be may potentially be falling in 2021, we may need to see some greater cut to this capital expenditure. As we look at the fiscal and debt picture of the country, we can see that in 2020, the fiscal deficit came out at about 8.9% of GDP. As we look ahead on the fiscal plan of the government, the plan is for the fiscal deficit to come in at about 7.2% in 2021 and 5% in 2022. This level of debt is manageable, although it is elevated. PNG's debt is sustainable. It is able to service its debt. At the same time, the IMF has recognized the increased risk of debt vulnerability and adjusted PNG's debt classification to be at high risk. The government has made increasing use of financing from multilaterals. Last year, from the Asian Development Bank, from International Monetary Fund. In 2021, the government has borrowed from Japan, the World Bank, and is also set to receive around 360 million from the IMF with the allocation. But as we go into 2022, there will be increased uncertainties around where the financing will be available from. So the economy then in PNG is likely to remain challenged in the short term by the COVID-19 pandemic, and we also have the foreign exchange imbalance. We have the elections coming in 2022, but there are some bright spots with the reopening of Porgera in 2021 or 2022. We have higher commodity prices feeding through. And we also have the reform agenda ongoing, which should also provide a level of support. So we expect that PNG will be able to make its way through the next couple of years. It will be challenging. Then when we have this new growth phase coming from hopefully 2023, 2024, that will very much support a new decade of growth. And it will also help to address some of the macroeconomic challenges that PNG has faced over the last 5 years or so.